Hey everyone, another daily editorial here on the KE Report. I'm getting an update from Metalla, royalty, and streaming, traded on the TSX Venture Exchange under the symbol MTA, and on the NYSE under that same symbol MTA. Chatting with Brett Heath, President and CEO, following up on the February 26th news release where we have a resource update from the Gosselin and Côté royalty. This is becoming a pretty important royalty for the company, as well as outlining some catalysts for 2024, all within the company's royalty portfolio. Brett, let's start off with that updated resource coming from the Gosselin portion of that royalty. Now, Metalla holds a bit of a different royalty here where it's on, I believe, the whole Gosselin deposit as well as a portion of Côté. First, remind us of what that royalty is here, and then the update of the resource, how big that Gosselin resource is now.
Sure, Corey, and thanks again for having me back. So right now we have a 1.35% royalty, and what the royalty covers is a portion of the Côté deposit on the northern side of the pit. We estimate that somewhere between 6 and 10% of the reserves of Côté. And also, we've got a royalty that covers all of Gosselin and pretty much everything kind of in between the two deposits. When Gosselin was originally discovered, it was about 1.5 kilometers to the northeast from Côté, and currently it has become so large and continues to expand. The pits actually overlap as the way that they're proposed, or the pit shells overlap as the way that they're proposed now. We continue to see just so much potential. I mean, Gosselin, I have to say it's probably one of the most phenomenal assets that I've ever come across in my career, and we're really happy to have the royalty on it. Just continues to have a lot of success and all the step out drilling. Last year, IAMGOLD drilled 34,790 meters on 57 holes. So not a significant amount of drilling. We see these types of programs on several assets on our property packages every single year for the majors, and normally they add not a very significant amount of ounces. I mean, sometimes it could be a couple 100,000, 300,000, 400,000 would be really good. But what we saw happen at Gosselin last year is off the 34,790 meters, they increased the resource by 2.4 million ounces. So it just shows that this is and continues to be, I think, one of the most special deposits in the Americas even. I mean, surely North America. Currently, now it stands at 7.4 million ounces. IAMGOLD has already kind of come out publicly and said, look, they think Gosselin's got the potential to be just as big as Côté. And that's a significant thing, because when you put these two deposits together, and if Gosselin gets as big as Côté, you've got a project that is likely, one big super pit and will rival the likes of Malartic and Detour. And it's these types of assets that give companies the ability to scale the rest of their business, to make that significant jump from kind of junior to intermediate, that really drive a lot of the value. And what we see here is this asset is growing like crazy. They're going to drill another 35,000 meters this year in 2024. And that is an extremely tame program for an asset that returns that much value on every meter drilled. But IAMGOLD is still really focused on making sure that Côté comes online this year. First gold pour for Côté is expected this month. So it's here, it's ready to go. And as that ramps up and as that's successful, as they get into the second half of 2024 and into 2025, they're likely going to increase, or we believe that 2025 it'll likely be a much bigger program on the drilling, and potentially they'll look at different studies to integrate Gosselin as early as 2025. It could be 2026, but again, very significant deposit. I think we have exposure to a very, very meaningful part of kind of the combined deposit here. And again, it's on an asset that's got all the infrastructure fully permitted, going to do first gold pour this month. So that's critical in this environment, as it's so difficult to build mines and permit mines. So it's really more of just a function of how big Gosselin can get, and they're adding a lot of value for us.
Okay, so that recaps that updated resource, and I was going to ask, what about bringing that Gosselin deposit into development? You mentioned the timeline into the mine plan over the next year or two. In terms of the production coming this month from Côté, is any of that going to be attributed to Metalla's royalty over that deposit?
Yeah, and just to be clear on Gosselin, we're looking at, they look to integrate it into the mine plan potentially in 2025, 2026, and then usually it would be another kind of year or two after that is when that would finally kind of come online, when they're finished doing the permitting and so forth. For Côté, because it is a very significant pit on its own, the sequencing of the pit is going to start in the south and then work their way up to the north. So we are not expecting any cash flow from Côté in 2024. Likely that will come for us in the latter half of kind of 2025 to early 2026, but that'll be a bit lumpy. So, on average, it'll probably be kind of around what we expect, but for the first kind of year or two, as they sequence up to the north, then it'll be a bit lumpy, even though we're not getting production this year on it. Most likely that it'll be kind of more significant in 25, 26 when it finally comes online.
Okay, let's also talk about a 2024 portfolio catalyst outline where you outline 9 catalyst points. I'll post a link to that news release, but I do want to talk about those top 3 points because they all deal with production, either starting or a mine restart here. So G Mining Ventures at Tocantinzinho, production expected in the second half of this year. Agnico Eagle Mines, Amalgamated Kirkland, first production anticipated also second half of this year. And Polymetal Resources, a mine finance and mine restart expected. Take us through these catalysts, which could, it looks like, lead to some cash flow for the company tail end of this year.
Yeah, so the biggest part of the growth that we're going to see in 2024 is going to come from G Mining Ventures Tocantinzinho project. This is 200,000 ounce on an annualized production profile, 2+ million ounces of gold, and they are stated to come in production in the second half of 2024. We've got a 0.75% royalty. It's a gross value royalty, no deductions, that covers the whole deposit and quite a bit of exploration ground around it. So that'll be a very significant contributor in 2025 is that mine will be fully ramped up and we'll get a full year of production. I believe in 25 their mine plan has over 200,000 ounces of production kind of from a guidance perspective in there. So that'll be a great asset. It'll slot right in there with our royalty on Wharf, which kicks off a couple $2 million a year, and our royalty on Aranzazu, which is very similar, and a handful of others that really kind of make up the kind of core part about our growth and our existing production. Beyond G Mining for our growth this year, Amalgamated Kirkland, which is Agnico Eagle, is also planning on first production anticipated in the second half of 2024. So this is a 0.45% royalty we have over this deposit. There is a huge amount of potential exploration upside. They are drilling that right now. Again, it'll be not a very significant amount of cash flow this year because they are ramping up production in the second half, but come 2025, that'll be a full year production on that one, which will be great for the growth of our business. And then also the Polymetals Resources start will be a very, very significant one. They still have a little bit of work to do, but they have done a very great job at the studies, and they've got a mine restart plan already disclosed publicly, a 10-year mine life, And with a 4% NSR on that project, according to what their plan is, that'll be a very significant asset for us, potentially one of the larger cash flowing operations in 25 or 26, depending on kind of when that comes online, and a handful of others that are just right behind it. I mean, this is the beauty of our business. We worked very hard over the last 7 years to build out our pipeline, build out our portfolio, and we're going to see a lot of growth here over the next 5 years, which we expect will work its way up from, call it 3,500 to kind of 4,000 gold equivalent ounces this year, and last year upwards to 15,000 gold equivalent ounces annually by the next 5 years, which will be a very significant jump, and we see a lot more growth behind that. So again, it's all bought and paid for.
Okay, let's talk about the environment now for maybe transactions in terms of acquiring new royalties, anything around that. One thing that we have continued to hear is just how expensive capital is. We all see that in our daily lives and also from the corporate level. Interest rates are higher. It's more expensive broadly to raise money and to finance deals. How is that, or is that going to impact Metalla in terms of this year on the acquisition front?
So you're completely right. Cost of capital across the board has significantly increased, and it's really increased the most with smaller companies, which makes it a very difficult environment to grow. And as a junior, you've got really one mission, and that's to become an intermediate. That was, I think, a long-term catalyst for Metalla and the merger of Nova last year is that, I strongly believe with our asset base that we have now and our cash flow profile that will be coming in the very near term has the profile of an intermediate. And I think when that does come, we will command a market valuation that is appropriate and in line with those intermediates. But yeah, as a smaller company, it's a very, very difficult time to grow. And again, the environment has changed. Years ago, when we started Metalla back in 2016, it was the exact opposite. Leverage was very, very, very cheap. Equity valuations were very high. It was much, much easier to raise capital at reasonable costs and buy really good assets. And that's what we did. And we were super aggressive doing that over those years. And, we deployed a little over $300 million US doing so. And we've got some really incredible assets that continue to grow, continue to kind of prove out our business model and strategy and track record. But it's just not the environment right now for a smaller company to grow. And we see other companies having to take on very, very expensive debt, while equity valuations are down, or kind of be forced to look at raising equity at lower valuations. So it's a very difficult decision for, I think, a lot of the juniors out there. Luckily Metalla, we've got all that growth. We've got all that growth bought and paid for, and so there's no pressure for us, and there's not really an incentive. I feel for us at this time, that the market changes. All these things can change. So depending on how these things change, we evolve with it. But at the moment, in the current environment that we're in today, the market is just not paying you for good deals, even great deals for that matter. And it's not just with Metalla, but kind of across the board. When you've seen different companies put up, what we believe are very attractive transactions and acquisitions, the market normally sells them off. And so right now, that's really focused our attention on some kind of larger, more strategic type deals. And these aren't deals that we have to do by any stretch of the imagination. We've got the profile. We see a very clear path to becoming an intermediate, which, at that time, I think, again, will command a higher valuation from a market cap perspective, from an equity perspective, have a lower cost of capital, and we can really reassess. And in the meantime, we get to enjoy a very, very significant amount of growth that, and our shareholders, we believe will be able to enjoy that re-rate that's already bought and paid for. So, the focus is really on using all the skill sets that we applied to buy 100 different royalties over almost 8 years. Now it'll be 8 years in September of 2024. But use those skill sets and really focus our efforts on the more significant kind of material transactions that were kind of difficult, I think, prior to put too much attention to, just because the likelihood of those are obviously much lower. And so, we wanted to make sure we continued to deliver accretive transactions quarter after quarter. And you remember, you can look at our corporate presentation and just see the consistency within the transactions and the quality and the creative nature out of them, doubling our NAV per share over the last 5 years. This was all very, very great for us to do. But, we think here in the future, not having the pressure will really allow us to find some good things, and we can be patient for it.
So, Brett, just a quick recap then. You said about 100 deals over the last 4 years. How many total royalties does the company hold, and how many are producing currently with the projections of this year, by the end of this year?
Yeah, so we've got 100 royalties, and that was through 32 different transactions. So some of these transactions were portfolios and so forth, obviously bought more than one royalty, and we deployed a little over $300 million US throughout all those transactions. Currently, we've got 5 royalties in production. We've got 3 more that are expected to start producing, or really are going to start producing almost imminently this year in 2024. We're expecting potentially 2 or 3 more in 2025, and again, more in 2026, 2027. When we get towards the latter part of this decade, 28, kind of 29, there are some very, very significant jumps within our growth profile. So it's not, you've got to wait till then. It's kind of a stair step all the way through from the different asset base. But I mean, we've got the beauty about having so much diversification and so many royalties is just over the last couple of weeks, we heard about potentially some others that may come on in the not too distant future that we weren't even planning on it. So as that news comes, we'll obviously as it becomes publicly disclosed, we'll release that as within our quarterly updates or asset updates. But it's just, again, it's a really great portfolio. It's got a ton of value. It's very quantifiable. It's very measured, and yet the valuation is trading at historic lows. And I think the best thing that we can find right now is really our share price. I mean, if we've got any ability to bring some of this cash forward, which we're evaluating a number of options, we're have been working on building out our capital return strategy as these assets start to really kick in gear. I think there's a likelihood a dividend kicks back in 2025, subject to where the shares are trading. If the shares are trading very low, then we may look to return capital through share buybacks. But we're looking at a number of different options. We're evaluating a number of different potential options to make sure we can enhance our shareholders' positions. And as a big shareholder, that's what I want to do. I mean, we've got the assets and the valuation. We know what these things are worth, and it's just not even remotely represented within the share price today. So, I mean, all I can say is that translates into tremendous opportunity for investors, especially ones that have been around a while, that have watched the company execute and build our track record. The balance sheet is in great shape. The growth profile is in great shape. The assets that we have continue to advance and increase in value, and the share price is off quite a bit. So very, very good opportunity, at this stage.
All right, Brett, thank you very much for this update. As I mentioned, I'll post a link to the Metalla website where you can read over that recent news on the Gosselin resource update, as well as those catalysts for this year. If you have any follow-up questions for Brett, please send me an email. I'll get Brett to address those personally. And Brett, thank you again for your time. I'll follow up on the back of some more news.
Awesome. Thanks, Corey.